Okay, so welcome everyone to the session on tax tips for filing in Israel and filing in the US. I think this is a subject that when people hear that we're going to do a session on taxation, it's like there's a fear. It can be a visceral fear that comes up of what do I not know? How painful is this going to be? How much money am I going to be having to shell out for taxation? The fact that you're here means you're brave, and the more you know, the more it can help you. And I will tell you, I've reviewed with Noam and Yosefa, there is good news. There are actual ways for your taxes, surprisingly, to actually make you a little bit of money. So bear with us. It's we're going to go through this. I think by the end of it, you will have a much better understanding of how taxation works, both in Israel and the US, and you'll understand the sort of the main issues and questions and things to come up. So the goal of this session, just to sort of set kind of parameters, is we'll have a Q&A. Of course, we'll answer questions. The goal is not to go into every specific nuanced case of what do we do here, what do we do there. What we want to do is talk about the most important aspects of taxation within these two categories, so you understand what's going on and also the questions to ask if you're like, okay, now I have an accountant, now I need to think about, I should think about this question or that question. We'll also go into many specific use cases as well, so we will get detailed. And so that's sort of a little bit of an overview. And just to share, so we have two amazing accountants with us on this session. So Yosefa made Aliyah in 2009 from Florida, I believe, and she worked at two major accounting firms, and then she branched out on her own. She created her own boutique accounting firm where she helps Olim, and she specializes in U.S. taxation. I'm sure, maybe raise of hands or thumbs up, I'm sure a lot of you guys maybe know Yosefa. She's a bit of a celebrity among Olim of like an awesome U.S. accountant. Natan, I'm seeing the thumbs up there. So I think a lot of people were excited when they heard she was going to come. So Yosefa, thank you for joining us. Thank you. Sure. And then we're joined with Noam Omasi. Noam is a friend and a colleague of mine for maybe 7 years or so. We worked together in different companies. And Noam has worked as I guess, head of finance, different organizations. He started his own accounting firm. He deals with taxation in Israel. He has a whole host of different services he offers. He's actually my personal accountant, so I'm bringing the best of what I know here. So he's an awesome guy, and as I know, there are Israelis here, and there are also Olim. What I specialize in is also bringing together people that serve Olim in a way that we kind of maybe are used to from back in the day, that kind of thing. So Noam is a great guy, as you'll see. And okay, so let's jump in. Okay, so I don't know if Yosef or Noam, if you have a word or two you want to say, or if we want to share and just kind of get into it.
Yeah, I think we can just jump right in.
Okay.
Yep. I think it's best. Yeah.
Okay, so if one of you want to share screen, and then
sure, I'll do it.
Okay, cool.
Just a second.
And then also just to give an idea of the format of what I think will be the most helpful. So we're going to go through information. You're going to see by the end of this, you're going to understand things on a much deeper level. What we have a few sections we're going to go through. What I'd prefer is that we hold questions sort of until the end of each section, because if people are jumping in very quickly, sometimes it's hard to follow the train of thought. Again, there's a Q&A at the end. There's nothing that we're going to avoid, but so we'll go through things as questions come up, as I know they will. Some we might say, can we answer in a little bit? You can also jot questions in the chat so that nothing is missed as well. Cool. All right. So let's.
Screen looks okay.
It looks good and
okay.
Nice.
Okay. Thanks for having us.
Sure.
Noam, do you want to start?
Yeah. So basically, hi everyone. I'm happy to be here. And before we start, I'd like to put on board a bit of disclaimers. The first one is that my English is not so correct and not so good, so I apologize in advance for any mistake I'm making.
Continue.
For any mistake I'll make during the session. And moving on to the other disclaimers. So basically, what we try to do here is to give kind of the basics of the taxation both in Israel and the US, and accordingly, it's not professional advice on any specific scenario, and it's in the context of learning material. And of course, tax in general is a complicated domain, and especially when we're talking about the the connections between the US and the Israeli tax system. So there are quite some gray areas in that conjunction. And so in these specific specific areas, the accounting approaches that you may hear from one accountant to the other may vary. So I'd like us to start with this baseline, and of course we'll talk about the basic scenarios, and and the basic terms of taxation, and then we'll move on to the Q&A, which I think would be of added value. So, Yosefa, if there's anything you want to add.
Yeah, I mean, there's a lot of gray areas in international taxes. I think for sure the US tax law does not specify what to do about all these different Israeli investments. So there's definitely gray areas. In some cases, your US accountant or your Israeli accountant may be taking a position that is different from us and also valid. And in other chances, they might not know what they're doing, which happens. But hopefully you're using professionals who know what they're doing. So I think our goals here are really just our main takeaways, the main goals here are that you are aware of the issues so that you can have a productive conversation with your financial advisors and your accountants, and you know what to watch out for, and you know when you need to ask questions.
Sounds good.
Okay. So we're going to start with what is a tax event. A tax event is generally something that you need to tell your accountant about, something that you need to tell the government about and pay taxes on. Doesn't always mean you'll owe taxes, but the tax event is what is the term that we refer to as the thing that you need to report on your tax return. So basically, generally, if you buy something or you if you sell something or you trade something, or if you have dividends issued and you earn interest, you withdraw money from your Kupat Gamel, Karen Hishtalmud, any of these retirement accounts, that's typically going to be a taxable event, even if the money stays inside the account. So a lot of people think if they make a big sell, they sell a stock, they don't have to really do anything about it until they take out the cash. That's not necessarily how it works. If you have the money staying within the brokerage account, you still probably need to report what's going on within that account. On the US side, there can be additional things that you need to tell your accountant about. We'll talk briefly about PFIX, but you could have, if you own certain kinds of funds, the IRS, the US IRS, wants you to identify certain taxes and gains, even when you're not really doing anything. And the same with dividends happening within a certain kinds of funds.
And just to add a little bit of detail on that one, if you just go back for 1 second, Yosefa. So we've talked a lot in the different courses about dividend stocks, dividend ETFs, and there's the concept of DRIPs, dividend reinvestment plan. I have a dividend, and when I creates a dividend in a US brokerage, it can get reinvested. Even if in that kind of case where literally it buys a bit more of the stock, it still is a taxable event. So that's just one area that's sometimes a little bit gray. And also just one word on PFIX. Essentially, all the things that we're discussing in the course usually are US ETFs, things like that. None of those fall under the category of PFIX. I think we'll talk a little bit about them.
We'll get there.
Okay, so just
yeah. So I do sometimes work with people who are very late or didn't realize that they needed to file taxes. Hopefully this isn't your situation, but many people I deal with did not even realize that they had investments. Maybe their grandmother bought some stocks or funds or something for them, and they've actually been getting income this whole time, and they may have had an annual requirement to report to the US and Israel, and they didn't even realize it because they weren't touching it. The dividends, the fund or the stock was issuing dividends, they were being reinvested, and they didn't touch it, and they were earning income the whole time. And then something that is not a tax event, but you may still have to tell somebody about it. If you just buy a stock, it's generally, you generally don't have a tax event until you sell it. opening accounts, closing accounts, moving your own money around. Sometimes I see people asking online, like, hey, I want to move cash from my US account to my Israel account. What's going to be the taxes on it when I bring in like $10,000 into Israel? So that's typically not a tax event. You might have to do a lot of paperwork with the bank, but it's not taxable to move your own post-tax money around in your own accounts. Anything to add there, Noam?
No, basically, I think it gives the picture. I think the main takeaway from the two slides is the translation of whether it's not a tax event or it is a tax event is whether it needs to be included in the filing, or whether it even triggers a filing. And we'll see it later on in later stages when all we do is buying and holding. Then typically that will not trigger us a filing. In the next slides, we'll see that.
That's a really good point. As something I'm not always thinking about because most US citizens have to file every single year. But
Yeah.
in Israel, you would only need to file, possibly you may only need to file when you actually have a tax event. So we're not going to go over this in too much detail, but this is just generally some of the differences between US taxation, Israel taxation. I would say in the vast majority of tax concepts are the same. So these are just specifically some of the differences. One of the biggest differences is that the US cares how long you hold a stock. So you need to pay attention, or it would behoove you to pay attention to the holding period when you're selling when you're selling stocks, if you are a US citizen. If you're not a US citizen, it's probably not relevant. Depends on if you have US investments that are actually taxable in the US, but in general, if you're subject to US taxes, if you hold something longer than a year, it's going to be taxed at lower rates. If you sell something and then purchase the same thing again within 30 days, the US wants to say, hey, it's like it didn't count. You may still pay tax on the gain, but you may not necessarily claim the losses. So you want to watch out for that too. It's also a bit more work for your accountant if you're doing that a lot. So you might want to pay attention to that. You don't want to necessarily just be selling things to try to we'll talk about loss harvesting also, but just pay attention to wash sales because Israel doesn't recognize that. So you end up having taxes in the US and Israel potentially in different years.
And so I think just that main takeaway is that if you're especially within 10 years of Aliyah and you hold stocks or ETFs for over a year, they're typically taxed at a lower rate than if you hold them for less than a year. So it's preferential.
So we can come back to that if relevant. So the main takeaway here is just the concept of tax brackets or madrigot. So these are US tax brackets. The brackets stay the same for all individuals, but what changes is based on your filing status is how much income is in each bracket or on each step of the madrigot. So many people think that once they hit, let's say, someone will say, how much money can I take out or how much can I sell without going into, and still be within the 24% tax bracket. But you really don't need to focus so much on that because what's going to happen is that your first chunk of income is always going to be taxed at, let's say 0, and your next chunk is taxed at 10%. The next chunk is taxed at 12%. So let's say you're very close to this the top of the 24% range, and you go over by $4. It doesn't mean all of your income is taxed at the next tax rate. It just means those extra $4 get taxed at the next rate. Any questions about that or anything to add? Okay. So as I said, this is unique to the US. Israel in general, and Noam will get to it, has different tax rates for different kinds of income. The US in general doesn't. Everything is taxed at what we would call ordinary rates, except for things that are taxed at preferential rates, which generally is long-term capital gains. So that's, again, you sell something that you've held for more than a year, or qualified dividends, which we won't get too much into, but if you have a 1099, from a US brokerage, take a look and you'll see that they divide out the qualified dividends and your ordinary dividends. The first line generally shows everything and includes the qualified dividends. The second line is qualified. Those are going to be taxed at lower rates. So it's definitely worth paying attention to that.
Just going
You wanna
back
take
for
over,
what,
Noam?
Yosefa, just one more
Yeah.
question on the last slide, just to look at the chart. So just to make sure that I understand this correctly, you can see my mouse over the 0, right?
Nope.
No, oh, maybe because you're
Can you
sharing.
see
Okay,
my
no problem.
mouse?
Yeah. So for example, it's saying that up to, if I'm a single taxpayer, up to about $45,000, I will be taxed at 0%.
So it's actually that if you're, I should probably clarify the slide. I believe it's saying that if your total adjusted gross income is up to 44,000, then your long-term capital gains and qualified dividends will be taxed at 0%.
Okay.
So you have to take all your income into consideration. I think it's actually modified adjusted gross income. The reason we say modified is if, let's say, for example, you exclude all of your wages with the foreign earned income exclusion, which we're not going to get into, but you can ask me later, ask your accountant, you might notice that your AGI, or adjusted gross income, for if you're filing US taxes, will be 0. But for this, you need to add back the wages that you excluded. So it's your modified adjusted gross income. So
Okay.
basically, for all practical purposes, it's your total income.
Okay, so even if I look at for married couples filing jointly, the 89,000 to 550,000, to get a general rule of thumb, if I'm married and I'm filing together, if I make between 90,000 and 553 as a family, and I hold something for over a year, it will be taxed at about 15%.
Right.
So
Right.
that just sort of shows for everyone the difference between the Israeli taxation that's a flat 25% versus if you hold something for over a year, why that Aliyah tax shield is beneficial, because it's 10% less as a concept here.
For all practical purposes, most people are falling in that 15% bracket. So when we're making estimates, I would say probably 99% of my clients are falling in that area.
And one clarification on this point, just to understand, is as the last slide you said, the tax bracket, it's sequential. If I make $85,000 as a family filing jointly, or let's say 89,000, that will be taxed at 0%, but every dollar over 89,000 will then start to be taxed at 15%, or it will be the whole sum.
If all of your income was from long-term capital gains, which is rare, then something like that, yeah. But the actual calculations are a little bit more complicated. There's a whole 3-page worksheet.
Okay.
Yeah.
Thanks.
Okay, Noam.
Okay, yeah. Okay, so before we move on to drill into the more specific slides, I'd like to put out, the basics of Israeli taxation. I know there's a lot of different types of incomes and a lot of different thresholds, but I think the basics I'd like to share is that the corporate tax rate is 23%. The capital tax rate for individuals is 25%. In other words, all the different types of profits or incomes that fall under the category of capital income, like mostly interest and dividends and stock and property tax, usually most of them fall under the 25% tax bracket. And in terms of gross income from labor and payroll and so forth, it's the same mechanism like Yosefa showed in Israel, like Yosefa showed in the US, except for that the tax brackets reach 50%. They start from 10% and reach 50%. And of course, these are the gross numbers. From that, we have tax credits and tax offsets. So the effective tax rate is, of course, lower than that in most cases, but that gives you the kind of the basics of the tax rates. In terms of the tax regime, the tax regime in Israel, the taxation is both territorial and based on residency. In simple words, it means that if you're an Israeli resident and you have income domestic here in Israel and let's say you have an apartment in the US or China and you rent it, or you have business there, then it would be considered also as part of your taxes in Israel. Of course, we need to take into account all kinds of nuances with tax treaties and so forth, but that's we don't have enough time to go into that at this point. But the important takeaway is that it's on a personal basis, on a residential basis. The third point I'd like to talk about, which is a very important point, and I think it will it will answer some questions that I'm assuming some of you have around whether we need to file or not, and we'll see it later on, is that one big difference, and Yosefa mentioned it, between US and Israel is that basically in the US, and correct me if I'm wrong, Yosefa, almost everyone needs to file taxes, whether you're an employee or you're self-employed or you have a business or any way of sorry, any way of sourcing your income. In Israel, in theory, also almost every resident needs to submit a filing, but there are so many exemptions and so many ways out that in practice, almost I can say that most of the employees which don't have a business, it's called an osek, do not file taxes, and that basically that creates a kind of a problem for the tax authorities, because they don't have a way to understand how much taxes you need to pay. So because of that gap, the Israeli tax system is based on the principle that your employer or broker, or basically anyone that is paying you something or that is transferring you money, he's responsible to deduct your taxes. In other words, if you look at your payslip, you'll see that the employer deducted your taxes. If you look at if you operate through an Israeli broker and you had a transaction, then you'll probably see that he, if you had profit, of course, then you'll probably see that he deducted taxes at source, or it's called withholding tax. And basically that's the channel for the authorities to put their hands on the taxes, which is quite different from the US. So we'll see later on how that affects on questions you had around Israeli broker and US brokers, and how it affects filing. And the fourth point is basically the reporting cycle. So in Israel, it's annually. We need to report out annually. There are some cases where we need to advance or pay it and report and pay advances before that, but in general, it's annually, and unless there is a substantial or significant transaction, and as stated here, it usually comes from the property or real estate domain transactions. And yeah.
So
Yeah.
one comment that I think is a common question people have, sorry, if you just go back one slide,
Sure.
is I'm in a situation, I'm pre 10 years Aliyah. I have my brokerage account and it's in the US, and I file my taxes annually, and there's a tax shield. So it's that's how I'm filing it. Now I've passed the 10-year mark. I still have my US brokerage account open. Now, for example, if I have a Maytav Dash account, every time I sell something, I get a dividend, they automatically take that tax off, as you just mentioned. That's part of what they do. If I now am generating money and dividends in the US, the question then comes, do I have to report monthly or every few months those profits, or is it still something I do annually? How does that process work after the 10 years?
Okay, got it. So good questions. That's exactly the next slide. So Yosefa, if you can move on to the next slide.
Yeah.
So basically, this slide talks about the who and why needs to file taxes and when. So basically, the general answer that if you are trading, whether it's stock or crypto, via a foreign broker, and some of the names you'll see here for stock, Interactive Brokers, Ameritrade, and Binance and Coinbase for foreign brokers, all these parties don't have a formal entity here in Israel, and usually what we see is that we're seeing trades going through the US entities. once you have, and I'm not talking about the 10 years within Aliyah, after the 10 years within Aliyah, and I think we can't see it down at the bottom, but if you trade via a foreign broker, whether crypto or stock, that triggers a need to file taxes, okay, regardless of the type of income or profit, like if it's dividend or interest or stocks, and regardless of the amounts. These are basically the first two triggers are the triggers that if you operate through a foreign broker, you will need to report to file taxes here in Israel. And of course, with the exception that 1 and 2 are not applicable for Olim within the 10 years of Aliyah, or of course, if there are no tax event. In other words, for example, if you just buy crypto, if you just buy stocks, then basically even if you operate via a foreign broker, then typically you won't need to file taxes in Israel. And once the filing is in place, then to answer your question, Malcolm, there is no requirement to file or to report every month or every quarter. In practice, we're talking about annual tax return that needs to be submitted. In some cases, as I mentioned before, in some cases we'll need to report out, especially when it's a significant or big transaction. Then it's worth consulting with the accountant and maybe reporting out near the time of the transaction and paying the tax advances. But at the end of the day, the tax calculation and the tax provision would be part of the annual tax return that will be submitted. And the third trigger for filing is if you trade stocks, crypto via an Israeli bank or via Israeli broker like Meitav Dash or whatever, and you exceed sales transactions over 2.7 million ILS. And again, it's regardless of whether you sold with a profit or loss, or what your balance is at the end of the year is. All these don't trigger or are not relevant for the question whether you need to file. If you pass 2.7 million of sales, trading sales, that triggers a requirement to filing. And when basically do we need to file taxes? So usually it's in the time frame of April, May. For example, April, May, the filing for 2022 is usually was in April, May 2023. And if you're filing through a CPA or accounting firm, then usually you can utilize their extensions and file it later. Okay. I hope that this gives kind of the triggers for filing reports in terms of stock trading or crypto trading, and in the 10-year period of Aliyah and without and after that.
Yeah, I just want to clarify a little bit what we're talking about, the 10 years. So we often refer to this 10-year Aliyah exemption. First of all, there are other exemptions that are different, like, you know, for someone who, if you're a new Oleh, you never had citizenship before, typically you have 10 years from when your residency starts, when you don't have to report your non-Israeli income, which is like you have an investment account outside of Israel or property outside of Israel. You don't have to report that to Israel for 10 years. If you are a new Oleh or Olah within your first 10 years of residency, there are different numbers of years for certain returning residents and other things, and you should speak with an Israeli accountant specifically about that. So often when we're referring to the 10-year exemption, it could apply in different ways to different people, not just new Olim. But a couple common misconceptions. One is that sometimes people think if they're earning money like from a small business and their clients are in the US, or they're working for a company where the company they're working for is in the US or anywhere outside of Israel, they think they don't need to report that. Doesn't work that way. The exemption is not for work that you're doing while you are sitting in Israel. It's only for income where the asset is outside of Israel. And also sometimes people call me, I don't know, at least every couple months that say, hey, I'm just finished my 10-year exemption, so I'm ready to file my US taxes. Doesn't work that way. The US does not care that you are a new OLED at all. You might get out of state taxes. You should probably get out of state taxes, which we're not going to touch on. State like New York taxes, California taxes. But they don't care that you're within your 10-year aliyah. They do care about certain things like residency for different kinds of exemptions. But you, in general, and we'll get to this on the next slide. Generally, if you are a US citizen, you probably have to file every year. If you have US assets, whether or not you need to file depends on a number of factors, but typically if you own US real estate, even if you're not a US citizen, you probably have to file every year. Other certain investments, dividends and things like that, there's a chance you don't have to file. You should speak with the US accountant about that. But generally, every US citizen probably has to file every year. You would be reporting all your worldwide income. If you're a US citizen, a green card holder, a resident, you have to report your worldwide income. So that's your Israeli wages, your Israeli investments, your cryptocurrency in Thailand or whatever, you know, everything. You probably also need to file an FBAR, where you report all your accounts that are outside of the US on a form. The threshold for that is $10,000. Based on the year-end exchange rate, and that's all of the maximum balances in all of your accounts added together. So it doesn't mean you ever had $10,000 at one point. You could have had $5,000 in Bank Mizrahi, you got sick of Bank Mizrahi, you moved the same $5,000 over to Hapoalim, and you now have hit $10,000. So you have to look at the highest balances in every single account, every Kupat Gamel, every Keren Ishtalmut, you add them all together. Most people, especially someone who's been working in Israel a couple of years for an employer, they're going to need an FBAR. 8938 is a similar kind of reporting. We'll hit on that later, much higher thresholds. And then in addition, there are different kinds of things that you might have to report to the US if you have a company or make certain gifts or if you own certain kinds of funds. When do you file for the US? So you have to pay all tax by April 15th. But if you live outside of the US, then you get an automatic extension till June 15th. And most people living in Israel are not receiving all of their Israeli tax forms till March, maybe April. So usually most people living in Israel need to file an extension. Usually your accountant is going to file that for you if they know that you are their client for the year. That gets you until October 15th. So most people need to file their taxes and their FBAR by October 15th. If needed, there is an additional 2-month extension, but at some point you won't be able to electronically file anymore, and you really want to electronically file. If it's at all possible, you want to electronically file. The IRS just makes a lot more mistakes when you don't. I'm just gonna touch on a couple of these questions as they are relevant to the slides we already hit, and then some of the other ones we can cut back if that's okay. So selling something as a loss, Noam. If someone sells stock at a loss, in which case we're assuming they wouldn't have any taxes, and assuming they don't want to refund or they don't want to net that loss against anything else, do they need to report?
Yes.
Okay.
Yes, if it's within the 10-year period of Olim, then no, the answer is no. Of course, if we're talking about the reform broker, but if it's post the 10 years, then the answer is yes, we need to report, and even more so, it's not smart not to file, because then we can carry forward that loss and offset it against profit in the next years, and that way get a refund or pay lower taxes in consecutive years.
So the question to file Israeli taxes is not will you owe taxes? The question is there a tax event according to Israeli law?
Exactly.
There's a question on if you use the foreign earned income exclusion, is your modified adjusted gross income less? Your modified adjusted gross income, for all intents and purposes, is all your income. It doesn't get modified in certain cases, so it would be the same. It doesn't really change, however you deal with your U.S. taxes, your modified adjusted gross income is generally all your total income.
Just
I
being
think I answered
conscious
the
of,
question about being within 10 years or after 10 years, and we'll talk more about that. We're not going to discuss businesses, OSEC, Pator, OSEC, Morshe, Medicare, Social Security. Really briefly, in US, if you are self-employed, you should be budgeting an extra 15% tax on your self-employment. That's also going to trigger an Israeli tax requirement even before 10 years. So that comes into play when we're talking about maybe what investments are worthwhile, but we're not going to go into tax saving strategies and how to set up your business. And I think we answered when the taxes are payable, but if not, you can go back to that. So in the US, taxes, as I said, taxes are due April 15th. But if you expect to owe usually over about $1,000, you're required to make prepayments, quarterly prepayments. So that would means that really all of your tax for the year should be paid by really January 15th following the year. So like a quarter of your tax needs to be paid by April, the next quarter by June, and you should have paid 3/4 of the tax you expect to owe by September, which is the next upcoming due date.
Let's keep rolling just in the interest of time. I think there are some good questions in the chat, but let's the one other thing I just want to clarify, because I know some people ask me, your 10-year Aliyah shield, it ends 10 years basically to the day of when you arrive. There's questions, does it end 10 years within the 10-year calendar period? Does it end 10 years at the beginning of the 10th year? That's a question that comes up. My understanding, although if you guys know differently, is that if I came today is July 10th, 2023. If I arrived today, my tax shield would end July 10th, 2033.
Right. Yep. You're correct. Yeah. Okay. So basically one of the questions that were raised, and I think many ask themselves about that, is whether it is smart to operate through an Israeli broker or a foreign broker. And this slide is my personal opinion. It's not really a question of taxation. And I think, as I see it, there are two possible scenarios. If for any reason you're an individual that already files taxes here in Israel, and it doesn't matter what the reason is, then I think from my standing point, I think I would go with a foreign broker. And why is that? Because basically the benefits from operating through a foreign broker is that there is materially cheaper fees. Okay, there are lower fees, transactional fees, management fees than brokers here in Israel, like Meitav Dash or IBI, or of course through the banks. There is no basically when you operate through a foreign broker, then they don't deduct the taxes at source or at the transaction level. And of course, needless to say about the language and the user interface, which is usually more friendly for US or English speakers in general. And from my perspective, there is no cost to it at all, not even minimal, because at the end of the day, you file your taxes in any case. So I would go for foreign. If you're an individual that does not file taxes here in Israel, and you want to invest in a non-Israeli broker, then that, as we saw before, then that would trigger a requirement to file taxes. And the requirement to file taxes basically has its cost, and the cost is how much it will cost me to go to an accountant and file the annual return. That would be the cost. And the benefits would be, as we said before, it will be cheaper fees, and you'll be able to reinvest the taxes because they're not deducted at the source, and so forth. And here it's a question mark, because each individual will need to do his cost benefit formula and say it's worth for me to pay, I don't know, whatever amount to the Israeli accountant to file my returns, and in parallel I'll operate through a US broker and basically enjoy all the benefits, which translate to 2 weeks, 3 weeks, or 4 weeks of the cost that would cost me to submit the taxes. So I think this is how I analyze this question.
Yeah.
But of course, this is something very individual, and some
I think
would see
Noam
it
and I are
differently.
pretty much on the same page about that. There's what I refer to as compliance costs, which is the cost of reporting to whatever entity you're required to report to. In general, if you're a US citizen and you invest abroad outside the US, like in Israel, you invest in Israel as a US citizen, your US compliance, your US taxes and reporting gets a little more complicated. And if you're living in Israel and you're past your 10 years and you don't already have an Israeli accountant, and then you go and you invest outside of Israel, let's say in Interactive Brokers or Charles Schwab, now your Israeli taxes get a little more complicated. So there's no one solution for all. You need to weigh the costs and the benefits. But as Noam said, the fees in something like Interactive Brokers tend to be lower. And if you're within your 10 years, you're looking at the taxes in Israel, typically if you're well within your 10 years, typically the answer is going to be to look at US brokerages, because the taxes are so much less. I mean, my typical client is not paying any taxes. They're not having huge investments. We're talking about working people who have a modest portfolio, maybe a couple kids. And by the time you look at all the credits, they're not paying any taxes on the investments. If their portfolio had been in Israel, in that case, they would have paid. We're talking about someone who's within their first 10 years and does not have to report that to Israel. When we talk about filing, someone asked, what does that mean? I usually just drop off my charity receipts and my Mea V'Sheish to Mas Haknasa. So we're talking about when you do file, you're supposed to report 100% of your worldwide income to Israel if you're an Israeli resident. So you want to be really careful about, correct me if I'm wrong, Noam, but my understanding is when you just drop off your stuff at Mas Haknasa, you are technically filing a tax return. They're helping you file a tax return. And I think if you make a mistake, Israel is not as easy to fix. So you want to be careful if you're filing at all, that you are reporting every single detail that you're required to file. I'll move on here. If someone does not sell stocks within a given year, I think we answered these already. Everything has to be reported to Israel, no matter how much. I'm going to skip these because the bottom line is the same. The questions had to do with, do I need to report? My accountant says I don't. If you have a tax event, that means dividends or interest or sales, you got to report to Israel if you're past your 10 years. Loss harvesting, quickly, is selling stocks or assets that had a loss in the same year that you have a gain. So let's say you have a gain and $100,000 gain, and you might pay about $15,000 on that gain. If you sell other assets that had a loss, those will net, those will counter each other, and your taxes will be lower. Losses, though, can carry forward indefinitely, so you don't necessarily have to sell stuff with a gain to make use of the losses. Generally, they can carry forward and offset. It's a little bit more complicated the way that they can offset other types of income, but generally, long-term gains and long-term gains and long-term losses net, short-term gains and losses net. And then beyond that, usually $3,000 of loss. If you have loss from other things, usually can net against, $3,000 of capital losses can net against income from other things typically.
And just one extra detail on the tax harvesting. If one year, for example, you lost $6,000, each year the maximum that you're able to is $3,000 to offset, but any additional money that was lost in addition then can be applied to the following year, and the following year, I guess, until that amount would
in
be.
general, there is kind of like a use or lose it on that to a certain extent. So even if you're in a situation where you wouldn't have owed US taxes, you can't say, hey, I want to save all of those losses. You are going to see $3,000, or if you're married filing separately, which is the case for most people who are married to a US citizen, married to a non-US citizen, most usually is going to be married filing separately. But in most cases, you're going to see that $3,000 of your loss being used up every year, whether or not you want it or need it.
Okay, in Israel, in terms of offsets of capital losses or trading losses, then basically we can look at it as in two parts. When we have current losses from trading, I mean stocks, ETFs, and so forth. If it's within the year, then the loss can offset basically any kind of capital profit, like interest or dividend or capital, or if someone, I don't know, sold property and had what's called in Hebrew shevach, or paid property tax on the profit, then any type of any one of these four profits can offset the trading loss within the current year. But if we didn't have enough profit to offset the loss, then it will be carried forward to next year's, to the consecutive years, and in that classification, the offset can be done only against capital and real estate types of profits. That's for years that we had trading losses. But if we had basically gains from trading, then of course gains cannot be carried forward. They need to be taxed when in the year that they were born, but they can be offset against as I mentioned before, a carry forward loss from capital only, and it can be a current loss from your business activities, although it's not quite smart to do it if your current loss from your business is in a higher tax bracket. Then we're basically wasting like a 40-something% loss and offsetting it against a 25% profit or gain. So that's worth considering, and checking with the accountant and how to manage the losses offset against the profits that we have in our tax return. Okay.
Okay. So this would be typically for somebody who is past their 10 years and has income from more than one jurisdiction, for example, the US and Israel. The tax you pay to one country can typically offset taxes you might pay to the other country. The main takeaway is that you have to do it in the right order. So you might hear something about like the US gets first bite to tax this, or the Israel gets first bite. For example, Israel has the first bite of any earned income you are earning while you are in Israel, business or compensation wages. So the tax you pay to Israel on that then can offset any tax you would pay to the US. So it's important that whoever's handling your taxes understands that and understands the tax treaties and what order that needs to be done in, because it's not just like you do your US taxes first and you hand it over to your Israeli accountant, or vice versa. In some people's cases, if they don't have all different kinds of income, it can happen, but in most cases, if you have wages and various kinds of investment income, your Israeli and US accountant will need to work together to make drafts and send the credits, estimates and whatnot back and forth so that they get in all the right places.
Is there even a general rule of thumb about who gets first bite? I have an ETF of the NASDAQ, the S&P, it makes money and then I sell it. Is there a general idea? Okay,
Yeah,
the US
so
gets
the
first bite or
capital
Israel?
gains,
Yeah.
capital gains would be taxed to your resident country, Israel first.
Hmm.
And then capital gain distributions, as far as I understand, are taxed in Israel just like dividends. It's basically capital gain distribution is essentially a dividend that is paid off by like a mutual fund or any sort of a fund. So dividends are taxed first by the country where the company is that's paying the dividend or the fund is that's paying the dividend. So I hit on that in this example, but I assume you'll be sending out slides later and people can review that because I don't want to take up too much more time on that.
Sure.
Yeah, okay,
Is
so
it okay if we pass through this and maybe come back to it if we have, I just want to get to the end if that's okay with you, Noam.
sure. Okay, so basically, you
sorry.
wanted to pass, okay,
Oh,
sure,
sorry.
go ahead. No,
Okay.
I thought you mentioned, go ahead.
Basically, there's a lot of reasons you might need to file Israeli taxes. Review the slide, be in touch with Noam or your Israeli accountant. So there was a question on how taxes are realized once you hit that 10 years. If you own things before 10 years, you're hitting that 10 years. It's quite complicated. So please be in touch with a tax advisor before you get to that point so you can get everything in order. I have a few tips on that. If there's any sort of a question about when you bought it or how much you paid for it, you might want to get rid of it, but definitely speak with an advisor. This is an area where there might be some different positions. Any quick add-ons to that, Noam?
No.
Okay. These are the thresholds for the 8938, sometimes referred to as FATCA. It's a lot like the FBAR, but there are some questions on whether we need to report a virtual currency, cryptocurrency, and that's an interesting question. In general, I would say better safe and just report it on your FBAR. Technically, if you have an account that has absolutely nothing in it besides cryptocurrency, it doesn't currently need to be reported on the FBAR. It probably needs to be reported on the 8938 if you are required to file one. But in most cases, these accounts that have cryptocurrency, when you're dealing with the buys and sells, you can have cash in between. As soon as you have any sort of cash, it needs to be reported on the FBAR. The other thing I want to mention about cryptocurrency, actually we have a separate Q&A on that. I'll just keep going here. Cryptocurrency is that if you trade between currencies, you trade your Ethereum for your Bitcoin, for your Dogecoin, those are taxable events, okay? It's as if you're selling your Bitcoin for the Ethereum. Like you sold the Bitcoin, and for that, instead of receiving $100, you received XYZ in some amount of Ethereum. Okay, so those are taxable events. It's treated the same as selling stocks, but it can be a little bit more work for your accountant because we have to figure that out, because you're not getting a 1099 or a Tophus Shmona Sheva like in Israel for that, telling us exactly what's taxable. And usually many times your accountant is going to ask you to sign up for a separate like a website where you put in all your different crypto wallets and it figures all this stuff out for you. And those usually start about $100 more or less. So to have your $5 of Bitcoin that you're trading can be a lot of work. Speak with your accountants about that.
Yeah.
Charities, in most cases, if you're a US citizen, I think it's still going to be worthwhile to donate in Israel. Israel is very generous with their deduction. If you have a question, speak with your US accountant about that. On Israel's side, I don't think there's any question. If you have any Israeli liability, I think you're probably best off donating to Israel. Noam, you want to jump in anytime you want? And this is we can conclude with it here.
Yeah, okay. So basically this slide talks about a very specific case, which I think is not relevant to many people, many traders, but it is something that needs to be taken into account. And as we started from as we started in the beginning, I think the primary goal of this session is to be able to pass the knowledge for you to ask the right questions. And one of these scenarios, which is kind of complex, is when we trade in Israel, then sometimes the tax authorities can consider our activity as a business for tax purposes, even if we do it under our individual umbrella, or even without any osek patur, osek moshe, whatever. Sometimes the tax authorities can see it as a business for tax purposes, which means that in terms of taxation, the tax rate can reach about up to 50%. Now, it's not a straightforward scenario. It really depends on many indicators, like they look at whether the trading is in high volume, whether we trade every day or every hour, or and so forth, and our employment status, if we're working with a pay slip, or if we have an OSEC and we report out sales. And of course, there are other factors that they take into account. But if you find yourself in such a scenario, best to consult with your accountant to look up for solutions. For example, one solution that could almost mitigate the risk is trading via an IRA instrument here in Israel. Of course, that has its U.S. Taxation aspects that also need to take into consideration. But in terms of mitigating the risk here in Israel, that's an option that would, of course, would be considered if this scenario
And
applies to you.
This would also be relevant to someone within their 10 years. They could still be considered to have a business here, even if they're in their first 10 years and they're trading every day in Interactive Brokers or Charles Schwab or something, right?
Especially if mainly if we're doing it through an Israeli broker.
Okay. Okay, and then on the US side, just a few takeaways, which I'm happy to answer questions privately about this after. I will let most of you go soon. PFICs are something that we need to watch out for. You're welcome to come to me for more. I have other resources about this. It stands for passive foreign investment company. So foreign is one of the key words here. Any sort of a US-based mutual fund or ETF is not going to hit that foreign requirement. However, you could still have, for example, an Israeli fund that holds 100% US securities. That would still be a PFIC because it's based in Israel. So it could hold all US stuff, all US stocks or something. It would still be a PFIC if it's based in Israel and it's a fund. There are additional definitions, but that's generally what you might want to watch out for. So anything in an Israeli fund, anything in your Israeli bank account or trading account that falls under Kranot Ne'emanut, typically we would call a PFIC. A bond fund, a Kupat Gamel Lahashka'a, not a Kupat Gamel you get from your employer. If your employer is contributing at least 50%, we typically say it's okay. I'm not going to go too much more in detail about that. You can speak to your accountant if you're concerned. But a Kupat Gamel Lahashka'a, or any sort of like a prati, any sort of an insurance that is outside of what your employer is contributing to, could be considered a PFIC. It can be very tricky and very onerous reporting, very punitive tax rates on that. So speak with your US accountant. And when I say speak with your US accountant, I'm referring to a US CPA or EA who is currently licensed and registered, legally filing US taxes, who is working every day with people living in Israel. Your typical US accountant who is sitting in the States, they could have 50 years experience, 70 years experience. They could be brilliant, genius, your favorite uncle who's doing your taxes for free. If they are not working with with US citizens living in Israel every day, they don't specialize in the US-Israel tax treaty. They don't understand Israeli income and how to read Israeli income statements. They're not going to know what's taxable and what's not taxable. And filing taxes for a US citizen who lives abroad, it's like a completely different report. So you really need a US accountant based in Israel. And if you have questions about that, I'm happy to take a peek at what's being filed and point you in the direction of an accountant who's appropriate for your needs or your budget or whatever you're looking for. That gets to claiming credits in the right direction. If you're not filing taxes on time or in the right countries, in the right places first, for example, let's say you thought that you had a 10-year exemption in Israel from reporting your US wages. You could be paying US wages for 10 years, taxes to the US for 10 years, and then Israel comes along and said, wait, no, you were supposed to be paying us the last 10 years. So those are some pitfalls. And I think we'll wrap it up there, at least for whoever needs to go. You can.
If we have maybe 2 more minutes, Malcolm and Yosefa, I think it would be great if we can go back to one slide which we jumped over, because I think it's worth talking a little bit about it.
This one?
Yeah, this one. So basically, many people are not aware that they are entitled to tax credits and tax refunds. And of course, there are many reasons for tax refunds, like employment changes and personal status and children, disabilities and maternity and so forth. But if we're focusing on the trading related refunds, then it's very likely, if you find yourself in one of the four clauses in the slide, then it's likely that you're entitled to tax refunds. So basically, if you in Israel, capital losses are offset capital gains, and the banks and the brokers usually do it automatically, but under one condition, that the capital losses are incurred after the gains. So if you had losses and then you had and if you had gains and then you had losses, then most likely the bank did not offset them, and you're entitled to this offset, and that could give you a tax refund. If you pay taxes on interest and dividend inflows to your account, regardless from who paid them, then the banks usually and the brokers here in Israel usually don't do the offset between the different types. So, and as we saw before, stock losses can be deducted or can offset the interest and dividend inflows. So that's another reason. If you're trading via several brokers or banks, regardless if it's foreign or Israeli, then most likely you will be probably entitled, because of course not all the time there is gains in all brokers, and sometimes it diversifies. And I'm putting aside the 10 years of Aliyah, but take into account that if you had losses in prior years, which are not within the 10 years of Aliyah from a foreign broker, then that were not reported, then probably you can carry forward them to the current years, which will also trigger a tax refund. So if you find yourself in one of these four, then best to check your entitlement to tax refunds.
I just want to mention one point on this, because this was also something quite interesting that I learned from Noam. Essentially, there's many very common situations that happen. You can see that, like, your status changes, you go from single to being married, you have a child, you have disabilities or allergies that come under the play, babies born, things like that. Many times during these things, the proper tax deductions do not take place. And there's a way, we were up to 6 years in the past, you can actually go and have your taxes checked to see whether the government owes you money. In almost all cases, they actually do. It's kind of crazy. One thing that no one provides, other accountants provide, but it's just a good thing to be aware of, is many will check this for you at no cost. The way that it works is that if there's a tax credit, they will check it for you. And then if there is a surplus that you're owed, then to file it, they will get a fee for it. But it was something very interesting for me, because I thought, my taxes in Israel are filed for me automatically. That means that it's done correctly. And then in almost all cases, there's actually money owed to where you can get audited for no cost, which is one way where taxes, I promised in the beginning, you might actually find out how taxes can make you money. This is one example, just for people to be aware of, that not everyone knows about.
Yeah, when I mentioned like I'll work with people who didn't realize that they had accounts in the US, it happens often that I'm looking at someone's accounts and their tax situation. They came to me to fix their US stuff and I say, hey, did you realize you were supposed to be filing Israeli taxes this whole time? They get really scared. And then I go to the Israeli account, I say, okay, did you finish? Can you tell me how much they owe so I can take the tax credit? And they get a refund, like more than 50% of the time. They're reporting more income and yet they're still due a refund. So definitely worth looking at. There are two quick things that I did want to mention. One is we were talking about tax rates. You all should also be aware if your income is over certain thresholds, there's net investment income tax. That's another 3.8% tax to the on US taxes if you meet certain thresholds, and that cannot be offset by foreign tax credits. So that is frustrating. I have an article about that if you're interested. Also, spouses with joint accounts. If you're a US citizen and you're married to someone who's not a US citizen, speak with your accountant. But what I find is that the Israeli, if you have an Israeli account that has trading like Maytab Trade or something like that, or bank discount, whatever, you have stocks in these, they don't report correctly. So I think one of the ways that you can mitigate those mistakes is by having a separate account from your stuff, even if it's your money, even if you want to, I'm not going to stop you from trading, speak with your own accountant about that. But what I found, for example, is that they will report 100% of the income in that account under the US citizen's name. So if you have a significant portfolio or you're getting a lot of dividends, which would normally be split between you and your spouse, the bank might be reporting it all as your income. So keep an eye on that, speak with your accountant. The banks make a lot, the Israeli banks really don't know what they're doing when it comes to reporting to the US. They make a lot of mistakes.
So why don't we, first of all, thank you guys so much for taking the time, putting this together.
Sorry, wrong one. Sorry.
It was, so I think what we'll do is, if you had, I know you guys share also different services you provide and things like that.
That's where I was going.
There we go. And then I think after we see this, okay, so fantastic. You guys can see, like, obviously we're sort of doing the tip of the iceberg to give you guys the concept. There's other services that they offer. What we can do is I'll send everyone the slide deck so you can review this stuff. You'll have the recording as well. Do we want to, let's go into questions or some in the chat. Maybe people want to just get on video as well, and just to dive in a little bit more. Let's see.
I don't mind answering some questions, but I don't want to keep anyone who is counting on this being over.
So yeah, anyone that needs to drop, no problem. Maybe if we turn off share screen, if that's okay. Let me see. And anyone
I have the chat open, so I see a lot of questions in there. Do you want me to hit on any of those?
I'm trying to, hold on one second.
Oh, you want to share a screen, so I should stop share.
Okay. So now, okay, we have Ellie, your hand's up. I know there's comments in the chat. Let's just hit them. Yeah.
First of all, thank you so much. So I have two questions. First of all, so a lot of what we talk about in our course is about investing for retirement, accounts, things like that. What option does an American who is an Tzma'i here in Israel have for investing and having tax benefits for retirement accounts? Because I understand you can't do a Kupat Gemel Hashka'a, you can't do a Roth IRA. So that's like the one area that from both sides I feel very confused about.
It's very tricky, and there's no one great answer. Pretty much every answer has some downsides. I think that in this, the way that Israel treats IRAs and U.S. retirement funds is a very gray area. So you need to speak with your accountant or privately if you want to about that. I don't know if you want to say more on that. And the way that the US treats these is a combination of a gray area and a poorly understood area. And so I think you really need to look at how your accountant is treating them, because there are more conservative positions, there are more liberal positions when it comes to how much should be reported and things like that. And for me to say, this is a problem or this needs to be reported in such and such way, I think it's it's best to speak with your personal account about how they would handle something like, you know, private pension or a life insurance plan.
I guess even using like the like deductive reason, I'm saying totally the wrong thing. If you are an American citizen and you are self-employed and you open a Karen Ishtalmut account, that is a PFIC. I think there are not so many exceptions, correct? If you open a pension, there's a minimum
I
amount.
consider it a PFIC.
Okay, so, yeah, so it's like that's problematic. If you open up a pension account, there's a minimum that you are required to put in, and I think beyond that it can be problematic. Coupon Gimel, that's a bit of a separate thing, but that's also under the PFIC category. So then I guess the question is whether you put it into accounts. I mean, even if you put it into an account in the US, the issue is that you won't get the same tax benefits because it's not like you're like, okay, it's not getting taxed on either when it goes in or out. So
It's also very individual though, because you're referring to tax deferred accounts or accounts with certain tax benefits, but let's say that your tax rate is 0. So you don't necessarily want those. You might want a current investment portfolio where you're being taxed now. For example, let's say you're a new OLED, you're within your first 10 years, you've got 6 kids, you got lots of extra child tax credits hanging around. There's no reason to have like a US IRA and deferring your taxes when your taxes probably aren't going to be any lower. Every time one of those kids turns 16 or 17, you're losing credit. So, you know, unless you're replacing them, you might as well have taxes now when you have a bunch of little kids hanging around, if that's relevant for your situation. So you have to look at your own tax return, both US and Israel, look at your own US and Israel tax liability to see if deferring the taxes or, you know, putting into an Israeli account that reduces your taxes is relevant. Like in Israel,
Right, or doing something like a Roth IRA where you still pay the taxes now. But then from the Israeli side, that would be a problem, right? Because you would end up paying.
Yep.
I don't think it's as much of a problem as like a Kubat Gimel Hashgaha would be to a US citizen. I don't think Israel's making you file like 50 pages of reporting and $500,000, you know, penalty if you miss it or something. But there's a possibility for an element of double taxation. Leora, I think you have your hand raised. Unmute yourself and start over.
Leora, I think you're still muted.
I'm looking in the chat in the meantime. Someone asked if there's an advantage to filing Israeli taxes with the CPA later than April or May. I think you need to wait to file until you have all the documentation you should have to file accurately. In many cases, your US account's going to need to see your Israeli taxes or vice versa. That typically delays things. So there's no, let me take the opposite. There's not really any downside to waiting. With the exception of Colorado taxes, there's typically no downside to filing an extension as long as you've made a tax estimate if relevant. There's no problem with waiting until August, September, October to file. So wait till you have all the correct information and can file properly.
Leora, I just put in the chat because I saw you mentioned earlier in the chat a question. Is that your same question? Because if so, then even though we can't hear you, yes, thumbs up, or okay. So Leora,
she just posted her question in the chat.
Okay. Whether non-Americans have to pay withholding tax or any tax if they have US dividend, yes. So I think there was also another question about ETFs. Oh, that's probably so Leora. About if there's a US citizen, a non-US citizen, what we refer to as a non-resident alien. So someone who's not a US citizen, not a green card holder, not a resident, who has US investments. Usually the relevant taxes are withheld at source. And if that person receives Form 1042-S, with appropriate withholding, like they don't want a refund, the withholding isn't too much. In most cases, they don't need to file a US tax return. In many cases, there's too much withholding, and then they need to decide, well, do I want a refund? If it's $2 too much, they're probably not going to pay an accountant. But if they have like losses that they want to be carrying forward, and for sure, if they have any US real estate, that's going to need to be reported. Different Liora is a US citizen with property in Greece. I don't know off the top of my head about a Greece-Israel tax treaty. I would assume that it would be taxable first to Greece if there's any Greek taxes, then to Israel via country of residence, and then if all the tax, if the US wants any more after foreign tax credit, then you would also report that to Israel. But it has, if you're past your 10 years, you got to report it everywhere, I think, right, Noam?
Yep.
Although there are some exceptions from taxation for Israeli, certain things having to do with Israeli property, which does sometimes lead to US citizens paying taxes on Israeli property sales and Israeli rental properties, because Israel just has more exemptions from that.
Mhm.
I have a question.
Hey, Colin.
This is Colin. I did post it actually, but just to explain it. So for many years, I have a few IRA, American IRA accounts, SEP IRA and IRA. So I'm required that the RMD, I take the RMD out, and the US taxes me on that every year. So the tax is payable on just the RMD amount, as far as I can understand. In Israel, is it treated the same way? After my 10 years. So what
After 10 years. So basically, Colin, it's a tricky question because the classification of an IRA in Israel and in the US, the countries don't really correlate with each other. In other words, an IRA instrument in the US is usually not classified as an IRA instrument in Israel, and vice versa. So that translates to a tax event in Israel, even if the distributions or the withdrawals from the IRA account in the US are tax-free. In most cases, and I want to be cautious here, but in most cases, it will be considered as a taxable event here in Israel, and that's the way it will be reported. In specific cases where there is a need to for significant amounts or some special details or specifics for that instrument, then it is possible to reach out to the tax authorities and kind of hold a discussion with them. And in most cases, they don't give the exemption, at least from my experience. But it's something that it's a process that can be done to kind of get a pre-ruling before.
I'm not just to clarify. As my understanding, I mean, I think the IRA is, to me, it has not been taxable until that's the definition of my American IRA. So in other words, only the RMD, the required minimum distribution, is taxable. So I do that, and I've been doing that since I needed to. So let's say it's $15,000 in 1 year. So the tax is calculated, the US tax is calculated on that 15,000 tax with the RMD. What would happen in Israel? And I'm thinking about after the 10 years in Israel, not before.
Yeah, I think it's a big question mark. There's a lot, IRAs have a lot of gray areas surrounding them. And you need to speak with, if you have an Israeli accountant already, discuss this with them. I'm going to say something that's, I could probably say in a nicer way during office hours, but I'm going to go on and say, if you need to explain to your Israeli accountant what an IRA is, you might need a different Israeli accountant. Or if your Israeli accountant just says, no, you don't need to report it because it's from the US, you might want a second opinion. But if your bottom line is speak with Noam or an Israeli accountant who specializes in this area, but it's very tricky, and I would understand if Noam doesn't want to go on literally on the record on a recording with a tax position on this, because it's a very gray area.
Thank you.
Does that
Yeah.
sum it up?
It does.
Sorry.
Let's take maybe one or two more, just because I know
sure.
Yosef, I know it's getting late for you guys, and see.
There's a question. I need to start filing taxes in Israel for fiscal year 2022 because I have a corporation here. So I think he's saying that he is a Ba'am. They've opened a Ba'am. And so they have probably hopefully a very well qualified accountant, because that can be complicated. As per the law, I will file jointly with my wife, who is a UK Israel dual citizen. She has a stock portfolio which lost money in 2021. Does it make sense for her to back file to get the negative gains? That's a great question. No, I'm sure she's
Is the income, I can't find that question. Is the income?
It's from 859. So if she has 2021 losses, she had no
Yeah.
requirement to actually file an Israeli tax return. We're going to assume she had no requirement to file an Israeli tax return. Should she now file so that she can claim the losses so that they're there when they file in 2022? Because they're going to have to, they have to
So-
file in 2022.
Yeah, so the general answer is, of course, if you have a loss, which is a taxable loss, and you can, it's basically an asset that you can get pay lower taxes in later years. And of course, the general recommendation would be to file, but of course, this requires a simulation, because you may on a certain part get a carry forward loss, but I've already seen cases where when we simulate the overall picture, then you may save here a little bit of carry forward loss, but you'll need to pay taxes on your main sources of income, such that in the overall picture it's not worth the filing. So the most important takeaway here is the general answer is yes, but we need to simulate the whole picture before actually filing, to see that there is benefit in filing.
Okay. And Shmuel, if you are a US citizen, then I hope that you're using a US account here, because the US reporting of an Israeli corporation is quite tricky, and with serious penalties for not reporting.
So there was a follow-up from Leora in the comments, I think, just to clarify part of her question there.
Can I say whether the withholding tax on US dividend will only be deducted if I have US brokerage account? No. I mean, I can say the answer is no. If you have a US ETF in Mitab Trade or Bank Discount, they will withhold. They will report that to the US, not necessarily correctly. Whether or not you need to report anything else to the US, I don't know. I would guess that an ETF held in an Israeli account does not require any sort of US reporting. That would be my guess.
I would just add to that, from the Israeli tax perspective, then we would include that profit or income in the filing, and we'll also request a foreign credit for the tax that was withheld at source by the broker. So usually in these cases, there won't be any additional tax payments above what was withheld.
I can't hear you, but I'll wait for your follow-up to be typed. Yes, Yehuda says, as someone who's really new to all this and you're well past your 10 years in Israel, should your first move be to seek a tax advisor? I think that a good beginning move would be to, I mean, whether or not you want to have a consultation is one thing. You might want to reach out to a tax advisor. For example, I have a number of resources on YouTube and my website and blog posts and all kinds of things that often I can give to somebody so that they can start with that free resource before actually having a sit-down conversation. And if you need a sit-down consultation, that would be specific to your needs. But sometimes the answer is that you don't need to file. And sometimes, not usually in the US, but, or just, here's the price to do the tax return. Sometimes you don't need a whole conversation. The answer is you need to file a tax return. This is the fee to file a tax return. Let's get started.
Maybe Yosef, if you have one or two of those resources that could be relevant to the group, share with me, because also I'll send the recap and it can just help people to get more knowledge.
There's so many. I'm happy to give my YouTube channel. That's a good start. I'll put that in the chat. But people are welcome to reach out to me as well.
Okay, we'll take
just
one
to
more
answer
and then-
Leora's.
No,
And
Just to
Facebook.
answer Leora's. Leora posted another follow-up question. So the answer, you're correct. It's not a factor in deciding which brokerage firm to use. The withholding is derived from the stock itself, regardless of who the broker is. So so you're correct in your statement.
All right, we'll take one last one if there is, and then I think we'll wrap it up in a short 1.5-hour session on taxation here.
It's interesting to check how many people started and how much we have now.
There's still, I think, about 60%, 60, 70 from
That's nice numbers. Yeah, it's referral from Israel.
Okay, last one from Faith.
Either I should some line. From a taxation point of view here in Israel, there's not really a difference. Not sure about the US.
I'm assuming this person's not a US citizen.
Yeah, I think that's a fair assumption to make. Faith, this is for a non-US citizen. Canadian.
Good for you. Lucky you. If it's held in an Israeli account, they're going to withhold taxes. If it's held outside of Israel, then yeah, it makes a difference because it might require reporting to Israel that you didn't already have.
All right. All right. Well, thank you guys. Thank you, Noam, Yosefa, for volunteering your time and making the presentation and fielding lots of questions. Thanks everyone in the group in the chat for also all of the discussion and questions. Okay, so yeah, fantastic. I'll send out the recording, and again, Noam, my personal accounting, he's amazing. Yosefa, you as I mentioned, you're a bit of a celebrity among Olim as an amazing CPA. So I think now there's just more resources to help you guys, whether it's asking questions or reviewing this, and yeah.
And most important, good luck in trading and getting gains more than losses.
Indeed. All right, everyone.
Okay,
well, thank you.
Great. Thank you.
Thanks.
Have a good night.
Bye-bye.
Thank you.
Thanks for having us.